Hey there, thanks for joining us again. Today we're going to be going over the second series in this life insurance education piece. If you haven't watched the first video about life insurance, talking about the 4 bases that we need to cover with a life insurance contract, make sure that you go back and watch that previous video before we dive into this, because it's going to help lay the foundation for what we're going to be going over today. So today we're going to be talking about the 3 different types of life insurance that's available to people. So the 3 types of life insurance. So what are the 3 types of different life insurance? The part that you're probably the most familiar with, or the type that you're probably the most familiar with, is what we call term life insurance. So with term life insurance, let's talk about the details of that. So term life insurance is called term because it's good for a specific period of time. Usually that term, there's different variations, but usually that's anywhere from 10 to 30 years. So it's called term because it's good for a specific period of time, usually 10 to 30 years. Now, why is this the most common type of life insurance? Because the price point on it is typically the lowest, or at least it is when you're young and healthy. That you can buy the most amount of life insurance for the least amount of price. And the reason why that is because it's a temporary life insurance policy. It covers you for a set specific period of time. Now, I look at this as kind of like renting your life insurance, or compare it to renting a home, for example, to where if you can't afford to buy a home, should you just be homeless because you can't afford to buy a home? No, that wouldn't make any sense. That term life insurance, if you can't afford maybe some of the better options that cover you for longer periods of time and that have other benefits to them, then term is fantastic. It's great. It's better to have a roof over your head than to be homeless just because you can't afford to buy your dream house. Doesn't make any sense for you to live on the streets and be homeless. So term life insurance covers you for a specific period of time, usually has the lowest price point when you're young and healthy, and then it's kind of like renting a policy. Now let's talk about the second type of life insurance. That's what I would call hybrid life insurance. Now, we'll get into this a little bit more later because this won't make a whole lot of sense until we get into this third type. But just know that this is typically a little bit more of a price point than a term policy, but it takes into consideration some aspects of term and then some aspects of this third type, which is my favorite type, and what I hold the vast majority. I have a couple $100,000 of term, but I hold the vast majority of my life insurance in what we call permanent life insurance. Now, permanent life insurance, for all intents and purposes, it's quite that. It can take you up to age 120, and in some cases even age 121, but most permanent life insurance contracts go out to age 120. So I don't know how long you're planning on living. I'm kind of hoping that somebody shoots me or something if I get anywhere to that, close to that age range, but it'll take you out to age 120. I think the most recently recorded longest living person was 116 or something like that. And so for most people, that's going to be plenty long enough. So permanent life insurance policies take you out to age 120. Now, from a price standpoint, these are a more significant investment. However, I say investment because it really is an investment to where this does more than just cover life insurance. There's a lot of benefits to this while you're still living. It's not just a benefit when you pass away. And it's much like owning a home. So it's much like owning a home, to where in your home, like if you were to rent a place for 30 years or 40 years, you probably would have been better off to purchase a home or that home that you're renting, just because in 30 or 40 years you probably could have had a mortgage paid off and you would own that home free and clear, right? So if you can help it, if that's what you have to do, then great, rent for 30 or 40 years. But if you have the financial ability to and the option to, moving to more of a permanent policy is better, just like buying a home is going to be better and more cost effective for you in the long run, because with term, you always have an expense there. To where there's a lot of permanent life insurance policies that can be structured that cover you for literally your entire life, and you only pay into them for a certain period of time. That's in fact how most permanent life insurance policies are structured, and so that you can pay for them during your working years, and then in retirement you can stop, or if you want to in retirement you can continue funding these. It just depends on what your needs are. But just like a home that you own, you build up equity, or what we call this in the life insurance world is you build up cash value. You build up cash value over time in these permanent life insurance policies, to where, yeah, it's a higher price point, but also you're covered for a longer period of time, usually 3 to 4 times a longer length. And so your price point is obviously going to be higher, but your costs in the long run, if we're going to compare price versus costs, your costs are actually lower in the long run, just like they would be with building a house, or buying a house. So it builds up cash value over time. Now, I said that we'd circle back to hybrid life insurance. So what hybrid life insurance does is it takes some aspects of term and some aspects of permanent and kind of marries them together. So an example of this may be a 20 or a 30-year policy that develops cash value, or maybe a policy that takes you to age 120 or 121 that develops no cash value. And so those would be 2 examples of a hybrid policy and how that works. So I hope that this is helpful, talking about 3 different types of life insurance. And it always cracks me up to see these financial pundits and supposed financial gurus saying that somebody should always buy this type of life insurance and never buy this type of life insurance. It's everybody, like even people who have similar incomes, work at the same company, who live on the same street, maybe they're next door neighbors, maybe they're brothers, and they each have 3 kids, and they have the exact same house in the exact same area. Those people, each person is going to have a different financial goal and a different financial outlook. And so by trying to put everybody into one little cookie cutter box is just foolish. It simply is. And so when you hear these people who say, buy term life insurance and invest the difference, you should never buy a permanent life insurance policy, what that is either they just simply don't understand how to structure one of these or how these actually work, or they're flat out lying to you. And so if you ever hear somebody who's making that type of a designation, whether it's life insurance or another financial product, that you should always do this and never do this, when we're talking strategies, you need to take a step back and think about what type of ulterior motives that person might have. And so just understanding the difference between these types it's going to be extremely beneficial for you to know. And then by that same token, for people who say that you should always buy a permanent life insurance policy and never buy a term policy, well, what happens if I can only afford, going back to our last video, what if at the time I can only afford a permanent life insurance policy that only covers my final expenses, but by using that same money, I could get a term policy to also cover my income replacement or to transfer wealth. So it's just kind of foolish to say that you should always buy one thing and never buy another. That's not a financial principle. That's a tactic that has been taken out of context and just taught typically for an ulterior motive to sell books, or so that you'll buy insurance from their life insurance company that they're a part owner in, that they recommend. Whether it's somebody on the radio who's saying, you should buy your term life insurance from XYZ insurance company, and they don't actually tell you that they're a part owner in that company. So it's important to just understand how these 3 things work, and then there's obviously a whole bunch of more depth that we could go into each one of these, but this is kind of the basic talking points for understanding the difference between these policies. So hopefully this has been helpful. Stay tuned for our other videos where we're going to go into greater detail about what each one of these types of products means and how to use them in the most efficient manner for your situation. Thanks for watching. We'll catch you on the next video.